Hi, I'm Ross Mayfield, investment strategist at Baird. The first half of 2025 has been a volatile period to be sure. Trade and tax issues, a near bear market, a mega tax bill working its way through Congress, and more recently, geopolitical crises abroad. And though as we sit here recording in late June and the market approaches all-time highs, there are no shortage of questions as we move into the back half of the year. For that, I'm thrilled to be able to present a Q&A with Strategas President and Head of Portfolio Strategy Nicholas Bohnsack to discuss all the things that Strategas is watching in the market for the back half of 2025. Without any further ado, I'll pass the baton to Nicholas.
How does Strategas think about investing when the macroeconomic backdrop is this noisy?
The second quarter has been nothing short of a broken play, perhaps from Liberation Day, the Trump administration's announcement on its new tariff policy onward. And certainly tariffs have dominated much of the early part of the quarter with a pretty sharp pullback in equity prices, obviously, and attentions have focused or shifted more recently toward taxes. And of course, as the quarter comes to its close, it appears some geopolitical rumblings are certainly perking up in the Middle East. We remain, as always, focused on the building blocks of equities, in this case, earnings and interest rates. And it would seem that economic growth, at least here in the United States, perhaps normalizing in expectation, remains robust enough, absent a financial event, to keep expanding as we move into the year end. We'll remain focused, as we always do when things get uncertain, on the 3 C's, namely unemployment claims, corporate credit, and corporate profits. On unemployment claims, not a lot of noise in the labor market stateside, and that's to be taken as a positive, particularly given some of the immigration policies of the administration. Corporate credit remains perhaps a slightly more intense ray of focus from our part, particularly on spreads. We did see spreads blow out last fall. We'll want to keep those levels in mind as we move into the third quarter here. And corporate profits, as I mentioned a moment ago, perhaps only normalizing in expectation, but remaining, in terms of its expectations for growth, above levels that would typically precede a recession. So on balance, a cautious, albeit generally optimistic outlook for the U.S. economy and markets as we head into the second half of 2025.
What are your thoughts about U.S. stocks versus international stocks going forward?
It appears that the United States economy remains the strongest relative to its global trade partners. At the same time, we take particular note of both cyclical and secular catalysts that perhaps argue for an increased exposure to international shares over time. From a cyclical vantage point, we take particular note of the increased share of U.S. large-cap, mega-cap stocks as we move through the end of 2024 and into the beginning of 2025. The Mag 7, both on a price basis and on a valuation basis, appear to have gotten a little over their skis as we move into the middle part of 2025. Moreover, some of the drawdown activity that we saw earlier in the second quarter would generally not see follow-through from the same leadership that led it into those levels. And so we would look for a broadening cyclical base of equity ownership over the balance of the year. We've taken the decision in our tactical allocation portfolios to slowly increase exposure to international shares over time. And we think this is appropriate also from a secular standpoint, to the extent to which deglobalization is very likely a theme we'll contend with in the years to come. We would offer that the merits of diversification and the potential play of gold in the process of rotating from domestic to international equity ownership is something we would want to focus on from asset allocation standpoint.
Looking ahead to the second half of 2025, what are a few of your highest conviction investment themes?
As we look towards the end of 2025, 4 themes by our lights dominate the investment landscape, namely deglobalization, cash flow aristocrats, artificial intelligence, and the industrial power renaissance. It seems, however, as we reach the mid-year point of 2025, that focus on 2 of those, namely deglobalization and cash flow aristocrats. To take it from the corporate perspective, ultimately, when uncertainty rises and the cost of capital backs up, we become increasingly focused on companies that can preserve optionality, largely through free cash flow generation. At a high level, corporations only have 7 choices to make with their money. 3 opportunities to return it to investors, largely in the form of share repurchase, dividends, and debt retirement. 3 opportunities to reinvest in their franchise, largely through acquisition, capital expenditure, in either paying more labor or paying their existing labor more, and albeit they have different multiplier effects, both are in the name of growth. At the end of the day, if companies don't make any of those 6 decisions, they have retained earnings or free cash flow, and that optionality in preserving it through periods of uncertainty is of particular interest and generally rewarded by the market. We'll be on the lookout. The second theme to focus on is deglobalization, and given the uncertainty in the geopolitical dynamic, and certainly with no less focus on trade, the national defense, commodities and natural resource procurement, and IP sharing, we seem to have entered a new paradigm in terms of the global geopolitical landscape. Each of these subplots will have their moment in the sun perhaps, but it seems on balance that over the next couple of years, we'll have to answer the question with respect to deglobalization for almost any dominant investment theme. So as we look out towards the end of 2025, of the 4, those are the 2 we keep our eye on.